Hello and welcome to Market Matters presented by MyX. People who know me call me Joe Teague. I guess people who don't know me, you can also call me Joe Teague. With me is Brian Stutland. Brian, how's it going?
Good. Happy Monday. Trading begun. We're in a shortened week with Good Friday coming up this Friday. So a lot to get done in a little bit of time.
Lot to get done. And of course, the first quarter is coming to a close. It's been a great first quarter for stocks, up 10%. AI rally is continuing. We're rallying in the face of higher rates. So it's been a stronger than expected economy. And it's a rally that keeps going.
It really is something. And, one thing that's kind of interesting, though, recently over the last month or so, large cap value has outperformed the NASDAQ for once. So we're wondering if there's some sort of shift going on, or at least a little bit of catch up that should be done. So we have a great show on hand, and, we'll probably get to a little bit of that.
Yeah. Is there a rotation in the cards? But, the lion's share of the gains at the start of this year have come from semiconductors. And of course, Brian, NVIDIA is the biggest semiconductor out there. This has just been the story to start the year. There's no question about it. But we'll get into all that. Let's jump into real quickly. We'll do a weekly preview. We mentioned there's no trading Friday, but there is news on Friday. We're going to have the PCE, personal income and spending, coming out on Friday. And Jerome Powell will be speaking. So maybe we'll be ready for a move on Monday. But, shortened week, big news still coming on Friday.
Yeah, it will be interesting to see what Jerome Powell has to say. Obviously, the market can't react to what he is going to say, but that will probably be a market mover come Monday. So it'll be interesting to see how options start to get priced in headed into this weekend and headed into the end of the quarter, which I'm sure a lot of people will be repositioning given the huge run up. Like you talked about, the market up 10% this quarter is pretty massive. If you were short any calls, you probably missed a lot of that move, and people are going to reposition to get ready for the next quarter.
Yeah, it's like the market's got to take a day out of the model, but also add in that big event into the model. So that volatility will be interesting to watch how the VIX index tracks that. Volatility indexes track that. Fear and greed index, something we've been tracking. It was flashing this extreme greed for a heartbeat. It pulled back off of that, or this contrarian signal of extreme greed. It did not turn out to be a true signal to sell the market this time around. And I think this is actually good for bulls to have it been pulling off of this level, yet the market's still going higher.
It is. I mean, I think people are kind of pricing in. Obviously, the big news before was the Fed basically saying, yeah, rates are coming. Now we've seen basically Europe is getting into the ease mode as well with their interest rates. And so if we start to have some rate cuts, can valuations to this market go higher? We talked about this earlier in the week, Joe, you and I, and last week. And really, that's maybe been a driving force to get through this sort of greed, fear relationship.
And we're also, of course, following the VIX trend. We were talking about this last week. It was a make or break moment. We broke below it. So the VIX had been in a trend of higher lows, higher highs since December. We broke that last week. What does this really mean to you going forward, Brian, to see this trend break?
I think it's really interesting because really we were worried about this higher low move in the VIX. And historically, when you've seen the market rise and the VIX and volatility rise with it, that means institutional traders are out there trying to buy puts or get in with some leverage to the market by buying calls. That drives the price of premiums of options higher. As we know, the VIX is related to that. So the VIX pricing had continued to move somewhat higher. Now we've broken this uptrend channel. To me, that's a little concerning. If you're a VIX buyer, this could have some implications where maybe now volatility stays a little muted. We're heading into the end of the quarter. We're going to get earnings coming up. To me, it's probably an indication that earnings are going to come out to be very well, probably quite strong, beating expectations.
Yeah, and for me, just looking at this, we don't have to assume that just because we broke this trend line, we're going to be going back to, below 11 here, but below 12. It doesn't necessarily have to happen. I think it makes sense to see just some consolidation here, this 13, 14 area, without getting these spikes into the summer month. We'll see how that plays out. Of course, things usually happen which throw a wrench into volatility. Speaking of which, the VIX term structure, something we're following every week here on our channel. What is this telling you, Brian? How will we change here? To me, I see some steepness, but what do you see?
Yeah, I think the futures curve is getting back to more normalized levels when you typically see sort of like a bull grinding higher market. And what kind of happened is, we saw that trend line. Now the VIX has dropped back below that front month VIX future, getting more of that steepening of the curve out. It makes sense maybe if you're a volatility trader to potentially take advantage of that, maybe shorting some of these near-term VIX futures months. That's something that I'm looking at and that we're kind of positioned for with our clients, is because now we actually can get some decay in our favor. And it's sort of another way to be long the market, right? If you're short volatility, historically, you're kind of long the stock market because of that correlation between the two. So this might be a better way to sort of be long the market. Maybe the VIX kind of stays below this 14 and these VIX futures start to come down and meet the VIX.
I think that is spot on. So let's move it on to the big story of the week. Of course, we want to talk about the second quarter coming up here. To start the year, if you go back and watch your show at the start of the year, we were talking all about the Fed and how people are really focused in on these rate cuts, and it seems improbable that the market's going to get 6 or 7 rate cuts, which had priced in. And we were saying it's going to be about jobs, Brian. It's going to be how strong is this economy. We're going to see it in the jobs market. If the jobs market does not cool off, this economy is going to stay strong. These earnings are going to be good. We might not get all these rate cuts, but the market's going to be trading on earnings, on the economy, more so than the rate cuts. And that's exactly what we saw in the second quarter. The AI story continued to play out. Companies continue to beat these earnings, continue to raise their expectations. And we did not see any signs of the economy slowing down.
No, we haven't. I mean, the one thing is you have seen unemployment rate now tick up off its lows. It's up about 0.5% on the unemployment rate, basically since we saw the lows of that in 2023. Maybe that's something the Fed is looking at to say, okay, we finally got an uptick in the unemployment rate. Now maybe it's a time to cut. But Joe, to your point, the economy has been so strong. Earnings is probably going to be pretty good this April, given where volatility and the VIX has fallen off now. And so now people are looking at valuations and saying, if the Fed is not raising rates, if inflation is under control, valuations could go higher. I'm not so sure on the inflation side that can happen, but that's how the stock market is pricing things right now.
I think another thing that was misunderstood is how much excess capital was just flooded into the market in the COVID era, and we just assumed it would all have gotten burned up. We've talked about how corporations have more cash on hand than ever before and how this just surged during the COVID era. Corporations with cash on hand, they're earning more, their profits are high. They're probably not going to fire people, even if it would make them more profitable, just because on the next turnaround, they'd have to rehire somebody, and it's expensive to hire somebody. It's cheaper to keep the employees you currently have. So I think we just underestimated the amount of cash on hand. And also prices are higher, but people are just gladly paying higher prices. So they're not really slowing their consumption down much, which is just a sign that, how much extra liquidity, how much extra cash was really put into the economy.
Yeah, I mean, speaking of extra cash, that's why we need to, erase student debt. We need to give credits of 10 grand to go buy a new home, right? I mean, now that's my little jab at things, But yeah, the cash flow is there. The money supply.
I'll take some of that money.
Yeah. Yeah. Somehow figure out a way to send it my way too. No, the way to do that is really to invest and do it smartly. But yeah, the money supply is continued to be on the upside. And so, that's interesting that we're in this cut rate mode still, like I said before, yet we've seen such a strong economy, such strong earnings right now.
Well, I mean, yes, it is an election year. If you're going to go there, we might not need a cut. Fed's saying we're going to get some cuts. The market still thinks they're going to get some cuts. I think, the Fed's been pretty consistent that, we'll keep rates higher for longer. We'll take them down a little bit early. I think that's been what they said they were going to see. So here's the first quarter when it comes to the major indexes, Brian. We've got the Dow Jones Industrials, the Russell kind of lagging, the S&P hanging in there with the NASDAQ this quarter. It's just been a really strong quarter for those two indexes.
Well, I will make this point, though. The Russell, lagging, but it's played some serious catch-up over, let's call it the last 6 months, about up 25%. You look at the small cap Russell index, once it broke above 2,000, it's kind of had a nice bull momentum run to the upside. And so now we're getting more of a broad-based rally in 2024, unlike 23, which was so much about the Mag 7. Names like Tesla struggling this year to some degree, other names stepping up, small caps trying to play some catch up and participate in this rally.
So, okay, so obviously we talked about in the beginning, the semiconductor, they're leading the way. They're up 35% on the year. Question for you, Brian, in the S&P 500, of the S&P 500 sectors, who is number two?
Number two sector in the S&P. Well,
surprised.
Yeah, I mean, typically you'd see healthcare and financials lead the way, but I wonder if with this rally we've seen semiconductors really get there. I mean, is that the case, Joe?
The semiconductors are far and away ahead. They're up 35%. But who is number two here? Right here, it's the home builders. Can you believe it? 13.2%. Wow. That's kind of surprising to me, given the fact that interest rates have stayed high. That's just another sign of the resilience of this economy.
Yeah, and that's the case to the broadening out of this rally recently. Home builders, I mean, when you look at the supply and housing, we did get some decent data. Housing sales increased 9.5% month over month in the most recent number. We've seen home sales, or I'm saying median home prices increase over 5% year over year. So it makes sense that the home builders are having huge success because supply is somewhat limited given the higher rates. People don't want to sell their homes. So new buyers, okay, what do we got to do? Well, I guess we'll just have to build a new home.
That was a surprise last year. It's continued on to this year. Communications also doing well. Obviously, technology having a good start to the year. But in spite of that, like strong start to the year, and we talked about how earnings were so good. We had like a 78% beat rate so far in the first quarter for companies, which is better than the typical. It's usually high. I think it's usually 70+% for stocks to beat. We had a really good first quarter in terms of beats. The market's actually pricing in earnings to slow down. Can you believe it? In the summer here, Brian, they're pricing in earnings to take a dip for the summer. Those are the analyst estimates. So doesn't it make sense? Yeah, I mean, the straight way to look at this is people are saying, oh, well, these experts, these analysts are expecting earnings to come in. The economy is slowing down. The market will go lower. Well, number one, I would say, isn't that priced in? And number two, I would say, doesn't that just make it easier for these stocks to beat?
It does make it easier for them to beat, Joe, I think. And I think that's why we're seeing volatility come down. I think earnings are going to beat come April, maybe into June, July as well. And thus, I mean, look, Wall Street got it wrong on the number of rate cuts. They wanted 6 to 8 cuts. The Fed is saying basically 3. The Wall Street has basically been, poo-pooing this market for a number of months now and have kind of got it wrong. So I think earnings are going to come in stronger. They're going to beat. That's going to take the market higher.
Well, I will watch it play out. I think if the analysts are right, if we are in line with those earnings for the rest of the year, I think that could be a catalyst for the market to sell off. So it's not impossible for that to happen. Of course, the analysts happen to be right here. But I think that's kind of priced in the slower earnings and just makes it a little bit easier to beat. All right, let's take a look at the stocks of the week for us here. We're going to look at the SMH here, Brian, and this is the top 10 holdings of the SMH. It's essentially these top 10 come up with almost 80% of the SMH. NVIDIA itself is 21% holding of the SMH. But if you look at these holdings, you got NVIDIA just is in a different stratosphere. It's just in a different world. This is just a year-to-date chart. NVIDIA is up 100% year-to-date. Is just phenomenal. And yes, a lot of these other stocks are doing quite well. Taiwan Semiconductor, Broadcom, ASML, they're having fantastic years, up 30 to 40% themselves. But there are some that just are not along for the ride. I'm looking at you, Intel. Brian, when you see this chart, like how, as a portfolio manager, are you handling this? You just say, I'm going to buy all semis because they're all going to go up together, or do you have to kind of pick and choose?
Well, we do own SMH for clients. That's more of just a way for us to quickly rebalance things, but it's a pretty small weight. Instead, we really look to find interesting plays here, single stocks, because it is a stock picker's market. We have low volatility. We have a big dispersion in what goes up and what goes down. We even created a structured note that's called a growth note that tends to play into some sort of upside participation rate with some level of protection on the downside. It's a nice way for conservative investors to participate in riskier stocks, let's call it, such as an NVIDIA that has higher volatility. But we put that together, and when we do a note like that, we are actually picking some of these couple names out of the top 10 in the SMH, because there are going to be winners and losers in this whole ordeal. Those that are geared towards the GPU kind of data crunching thing have been shown to be the winners, and the others really kind of lagging.
Yeah, and just looking at this, it's just like, wow, is there a case for some sort of mean reversion? Is that possible? Is it time to buy Intel? I mean, I'm surprised. Honestly, I'm surprised to see it just getting shellacked this year compared to all of its peers. I know everyone knows that the U.S. government has invested a lot of money in NVIDIA. They've given them billions of dollars in the CHIPS Act to build new plants. So why isn't it going forward in this AI rally? Why isn't it taking place? That's kind of shocking to me. I think for me, maybe that puts a floor in NVIDIA, the amount of money that they're getting from the government, but maybe it's just a sign that they just don't have the goods. They don't have the chips that are good enough for this AI world.
Yeah, that's interesting. So, do you have a play here that would trade Intel and NVIDIA, let's say? I'm sure we could use some options, maybe show some people how you could play one versus the other. Sounds like you're kind of bullish on both, but maybe less bullish on one, which is Intel. And so maybe there's an option trade that we could do there.
Yeah, if you were to look at NVIDIA, right, and you say, I'm bullish on NVIDIA, but then if you take a step back and just take a look at this, 15-year chart of NVIDIA, I mean, it's just a rocket ship. And it just feels really hard to just put, $1,000 and $960 down on a share right now when you see this rocket ship. Is this the time to buy? It's really hard, it's really confusing to see all this. But you kind of look under the hood of NVIDIA. This does look daunting, to say the least. But if you look at their fundamentals, if you I know we're looking at a 73 EPS right here, which seems really lofty for one of the largest companies in the world. But if you just look out 3 years up to 2027 on moderate analyst estimates, that comes all the way down to 28. So that's just 3 years of growth. You're at 28 earnings per share. That's a lot more palatable to me. That doesn't sound so crazy because this is a company with real earnings, with real growth. And by the way, these analyst estimates, they have a tendency of consistently beating. So it seems to me like that could be there still could be room, but I don't want to jump all in, Brian, and just risk all the stock on it. Also, we're talking about NVIDIA, a potential trade, which I don't have lined up here for us, but a potential trade could be to sell puts on Intel, collect some premium on Intel because they have the government backing. They're getting a lot of money for the government to build new factories. You can use those premiums, collect that income, buy calls in NVIDIA, participate on the upside in NVIDIA with a limited downside, of course, because we know NVIDIA can be very volatile.
Yeah, I mean, NVIDIA options are somewhat pricey. Obviously, the stock moves around a lot, so options try to price that movement factor in. And so when you lay out premium for a call, it's a lot of premium to do. But maybe this is a smart way, Joe, because last week we talked about maybe some open interest levels. If it could finally push through 1,000, it actually might sort of just continue to blast off past that. So if you're looking like maybe a 30 delta call or 2.5 to 5% out of the money call that you're buying in NVIDIA is one I would like to play. And then to Joe's point, Intel's had some technical struggles here, selling a put maybe around the $35 level to give a little bit of cushion as the stock's sort of broken down below this $45 level might be a way to sort of, sell some premium and then, use that to finance some calls in NVIDIA.
Well, that is going to do it for the stocks of the week. Want to thank everybody for joining in live. Remember, you can always send us any questions that you have. Always love to get those. And want to thank everybody for tuning in. Remember to like and subscribe. Brian, do you have any final thoughts?
Yeah, I mean, it's going to be a short week. I expect not a ton of volatility maybe these couple days, but then heading into the end of the quarter Thursday, we should see some market movement. As like I said, people are going to reposition. We've had such a big move in the market, so watch that repositioning. Don't necessarily go for that quick head fake, because that could be just a little bit of noise as people sort of rebalance their portfolios.
Sounds good. Have a good week, and we'll see you next week.
This is Brian Stutland, Joe Teague here, signing off as Market Matters. Make sure you tune in every 1 p.m. Eastern time every Monday. We have a great show. We bring lots of ideas to you. Lots of thanks to Trade Your Hub and the MIAX for sponsoring this show. We'll see you next week.
All opinions expressed by Trade Your Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trade Your nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trade Your nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trade Your Inc. is the parent company of Trade Your Brokerage Inc. Trade Your Brokerage Inc. and Trade Your Inc. are separate entities with their own products and services. Securities products and services are offered through Trade Your Brokerage Inc. Trade Your Brokerage Inc. is an independent subsidiary of Trade Your Inc., all rights reserved, member FINRA SIPC.